Views expressed are solely those of the speakers and do not represent this show or its team.
A real financial plan is going to cover a whole lot more than just the investments by themselves. And when we think about what our financial objectives are, what we want to do with our lives and how our finances are going to contribute to that, it's more than just what stocks and bonds we own. It's got to be a much deeper discussion that goes way beyond just, whether I'm going to buy this stock or sell that one.
Welcome to Built to Last, conversations on wealth, work, and life. I'm Wade Lopez. I want to start with something we see all the time. People come in proud of their portfolio, and they should be. They've saved consistently, stayed invested through difficult markets, and they built something meaningful over a long period of time. But somewhere along the way, people can begin treating the portfolio as if it's their entire financial plan. It is not. In fact, a portfolio is a collection of investments. Financial plan is the strategy for your entire financial life. A portfolio can perform extremely well and still leave you with a tax problem, a spending problem, an estate problem, or an insurance problem. Gary, that's what we're talking about today. Why a good portfolio is not the same as a good financial plan.
Yeah, that's absolutely true, Wade. And I was thinking about that exact idea, when I was in Minneapolis meeting with some of our clients up there last week. And, I made the point with the advisor sitting right there saying, hey, as good as we're doing in the markets, as well as we're doing on portfolio construction, that's only one piece of a financial plan. And we're enabled to outperform and do the things that we're going to do on the investment side because of all of the other pieces of that financial plan being in alignment.
Yeah, I agree. When we look at the account balances, when they go up, it feels like proof of everything's working. And when we sit down with clients, in one sense, it is. The investments are doing their job. But the statement tells you what the investments are worth. It doesn't tell you whether they're paying more than in income taxes than might be necessary. It doesn't tell them whether the retirement income is going to last throughout their lifetime, whether your estate will transfer the way you intend, or whether an unexpected event can disrupt an entire plan. So, Gary, those are separate issues, and a better investment return does not automatically solve any of those, right?
Yeah, that's correct. Performance matters on the investment side, but the achieving of goals has to do with a lot more than just investment returns. It has to take into account other risks that are besides investment risk. It's got to take into account taxes. It's got to take into account the actual long-term objectives of the client and whether we're able to meet those in all facets of their financial life.
Let's talk about taxes. Let's start with that one. That's everybody's favorite topic, right? So we're going to start there because this is one of the easiest places to confuse what I call investment management with financial planning. You can outperform every benchmark and still give away more than what you need to in taxes because of where the money is held and how it comes out. Gary, the same investment can sit in a traditional IRA, Roth IRA, or a taxable account and create three very different outcomes.
Yeah, that's true. And that's why when we look at investment proposals for clients, we're always taking into account a number of different tax strategies that we can employ on the investment side to optimize the portfolio.
Right.
Among those are things like asset location, making sure that ordinary income assets are in tax advantaged accounts and accounts that are subject to a lot of tax or maybe going to experience only long-term capital gains and that kind of thing. And of course, another strategy that we use is tax loss harvesting, which I spent my August Insight piece talking about.
When we stand on the tax side, let's talk about, required distributions can create taxable income whether you need the money or not. The income can offset your tax bracket a little, but, it also can upset Medicare premiums and how much Social Security is taxed. So a good portfolio grows the money. A good plan decides where that growth should occur, when the money should be used, and how to manage taxes over your lifetime, not simply this year, right? So let's move into the next part, what I'm going to call potential spending or maybe potential spending problems. Gary, I've met with a lot of people with excellent portfolios who can't answer a basic question. How much can I safely spend every year without running out?
Yeah, and I think a lot of people, um, maybe rightly and maybe wrongly, think about their financial goals for retirement as just one number,
Hmm.
and as long as they achieve that number, then everything is going to be okay. But I think the benefit of working with a real financial planner is once you get to that number, understanding what spending really looks like in retirement, and all the different ways to maximize spending, minimize taxes, all of those things. The circumstances of that person are going to change over time. The tax law is going to change over time. And so, it's not as simple as just one number, right?
Right. And that, I think, sequence of events that can happen also matters. And when we talk about retirement income needs a structure behind it. And we think about, you know, we need to know how much income is required. We need to know where it's going to come from, what the tax impact's going to be, and what it will do when the market's down. Social Security, pensions, rental income, cash reserves, portfolio withdrawals all have to work together. The goal is to know where the next month's paycheck is coming from without having to react every time the market moves. So let's move into the third issue. I'm going to call it the estate plan. An account can perform beautifully. It can do fantastic for 30, 40 years and still end up in probate, become tied up for months, or pass to the wrong person because a beneficiary designation or an account title was never updated properly. Gary, your portfolio doesn't need to know that someone's remarried, or that one child needs an additional protection, or maybe a business partner depends on you, or that you want to support a charity that you clearly endear. Those are the things that matter, that don't really have anything to do with portfolio performance, right?
The investment manager often doesn't know who the beneficiaries are, and we
Right.
certainly don't have the skill set to make sure that the beneficiaries are changed according to what the client wants. That's not our primary area of expertise, and so we rely on the financial planner to do all those things and to know their client better than we do.
Yeah, that's the point, right? The portfolio is the asset. The plan makes sure the asset goes where you want it to go and when you want it to go, and in the way really kind of intended, or the way you really want it to. In fact, making sure that the estate plan is part and an integral part of the financial plan. Let's talk about insurance. That's the dirty word, right? Which usually it's the part people don't want to discuss. A portfolio built over decades can be disrupted by one event that, no one ever really designed it to absorb. Sometimes it can be a disability, long-term care need, an unexpected death, or a loss that leaves a family or a business without enough liquidity. Gary, I know as our investment officer, those things aren't really something you think about too often, is it?
No, it's not. And because insurance is there for low probability but high impact events, things that don't occur very frequently, but when they do occur, it's a big financial burden. And investment returns are usually focused around knowable risks based upon history that are likely to occur again and again and again, not exactly the same way, but in a similar way
Right.
that helps us to manage investments. But insurance is there for a uh, completely different risk aversion methodology.
Yeah, and I like to say, some people think of insurance, like it's really not about expecting the worst. It's about making sure that one event doesn't undo 20 or 30 years of discipline, right? So I think that's missed a lot. And I think it gets missed because performance is easy to see. You can look at your statement and it gives you a number. You can compare it with last quarter, last year, or a market index. The other part of the plans are much quieter, right? A financial plan is not something that's you're going to open up and look at on a quarterly statement. It's a part of it, but sometimes people, they don't feel like the plan might have got outdated or, and they need to live in it more, especially at death, right? If someone dies, you don't feel like, you're missing long-term care strategy until it's needed. You may not see the next tax problem until, you file your taxes. I mean, to me, those are opportunities that have already passed, and it's hard to react to something like that. Do you agree?
Yeah, I agree. It really is a timing issue more than anything
Right.
else. And insurance is a great way to solve for the timing issue because you don't necessarily want to have to use your investment portfolio, let's say with markets being down, when you'd be a better
Yep.
buyer than seller to cover some expense that could have been covered by an insurance strategy.
One thing is, and you get it, portfolios give you constant feedback, right?
Oh yeah. Oh yeah. Every day, every minute.
Yeah. It's a little different than a financial plan. So what does a real financial plan do that a portfolio cannot do on its own? I think it coordinates how many, how you use an account, right? It looks at taxes over several years instead of focusing on this year's return. Make sure beneficiaries are designated properly, accounts are titled properly, wills and trusts all work together. Gary, it also asks what happens if you cannot work, need long term care, lose a spouse, or face major expenses at the wrong time.
Yeah, a real financial plan is going to cover a whole lot more than just the investments by themselves. And when we think about what our financial objectives are, what we want to do with our lives and how our finances are going to contribute to that, it's more than just what stocks and bonds we own. It's
Right.
got to be a much deeper discussion that goes way beyond just whether I'm going to buy this stock or sell that one.
I think that's perfect. The portfolio is there to support that. And the difference is really, plan tells us what the money needs to do. The portfolio is one of the tools we use to help it get there. So, Gary, I mean, I wanted to bring in this discussion of financial planning because I think a lot of our clients see you as a chief investment officer, but they don't realize that a lot of things you do for us is designed around their financial plan. And I think it's important that they know you're a financial planner as well. You're just mostly a chief investment officer.
Yeah, and I think it's also understated, the extent to which, advisors and me as CIO are working behind the scenes to make sure that the investment proposal reflects the goals and objectives of the client, and is coordinated with those financial planning techniques that have nothing to do with investments, so that we're creating a fully understanded picture of the client, what their needs are, and
Right.
how the investments are
Right.
supposed to work in
Yep.
congruence with the financial plan.
Yeah, and I think you've done a great job of helping us do that. And we don't have a cookie cutter cutout. Everybody's in this. I mean, I think you've done an excellent job when it comes to helping clients, with, tax loss harvesting, cash reserves. I'm kind of anal about the proper amount of cash reserves in my portfolio. So, but I think it's important that people understand that you're not just a chief investment officer. You're also, a financial planner for the financial planners delivering the advice. So I appreciate that. Gary, this is the part of the program where I put you on the spot as always, right? And it's going to be a little different for you as the financial planner part. So, what's the one thing that matters most right now for someone who believes a strong portfolio means the rest of the plan is just handled and okay?
Yeah, I think the most important thing for that is to know that the portfolio is just one piece of a financial plan, and it only works when it's in congruence with all of the other financial planning pieces and the objectives of the client.
I think that's a good answer. And I want to move on to the next question. Is that's a little more difficult. What do you think people should be watching over the next 6 to 12 months within their plan?
As we're getting closer to the end of the year, I think clients should be focused again on what their objectives are for this year, how they've planned it out, and is it going according to what they wanted to do? Are there financial planning tasks that you need to tick off
Right.
before we get to December? Because once we get to December, it's going to be a mad rush to the finish, and that includes tax planning. And then thinking ahead, what are the things that they want to accomplish in the next year and over the next 5 years? And that's there's never a bad time to have that discussion with their financial planner.
Well, I think that's part of this last question, and you just answered it. What should they be looking for down the road, good, bad, or somewhere in between? Is there anything in particular that you kind of have your eye on from a planning perspective next year?
I think that most people realize that the portfolio is not the end all be all. And so I think that, they should be focused on other things besides the stock market, to take the stock market out of their immediate day-to-day lives, and focus on the things that are able to be managed as well.
Yeah, it's a great answer. I think a good portfolio, it tells you whether your money grew. A good financial plan tells you whether that growth is actually doing what you need it to. You got to answer questions like, will you keep more of it after taxes? Will it provide you income, what you need? Will it go where you intend? And can the plan survive the unexpected without forcing you to make a bad decision under pressure? I urge people not to mistake a strong investment statement for a complete financial plan. The statement only tells you one part of the story. Gary, another great conversation, a little bit more out of your comfort zone. I think you did a great job, by the way.
Thanks, Wade. It is out of my comfort zone, and man, that's what I need a financial planner for all the things that I don't get.
There you go. I know one. I know a couple of them that are pretty good, by the way. So,
Yeah,
anyway,
me too. They might be the same people.
They might very well be the same people. I hope they are anyway. So, but if y'all enjoyed today's conversation, please like the episode, share it with a friend or colleague, and subscribe so you don't miss what comes next on Built to Last. We'll see you next time.
This podcast is produced by Concord Wealth Partners, LLC, an investment advisor registered with the Securities and Exchange Commission. Registration does not imply a certain level of skill or training. The information presented is for educational and informational purposes only and should not be construed as personalized investment, financial, tax, or legal advice. Nothing discussed should be considered a solicitation or offer to buy or sell any security or investment product. All investing involves risk, including the potential loss of principal. Past performance is not a guarantee of future results. Individual results will vary based on personal financial circumstances, risk tolerance, and other factors. Concord Wealth Partners does not provide tax or accounting services. Tax and accounting services are offered through Concord Business and Tax Advisory, an affiliated CPA firm. For more information about Concord Wealth Partners, including our Form ADV Part 2A and Form CRS, please visit ConcordWealthPartners.com or contact us at 800-838-4370.